Erase CRA penalties, the 10-year rule Ottawa doesn't want you to know. Welcome back to Canada Chronicles. Tonight we're uncovering a quiet rule inside the Canada Revenue Agency that could legally erase thousands of dollars in tax penalties and interest. But only if you act before the clock runs out. If you've been hit with late filing fees, missed payment charges, or mounting interest, don't panic. There's a 10-year window hidden in federal policy that gives you a chance to make it right. We'll explain how this taxpayer relief rule works, who qualifies, and why waiting too long can cost you thousands. Before we begin, make sure you're subscribed and notifications are on. You don't want to miss future updates that protect your money and benefits. And stay with us until the end, because we'll reveal the silent deadline you can't afford to miss, the hidden cost of penalties and interest. For most Canadians, filing taxes is routine. Submit your return, wait for a refund, and move on. But if you file or pay late, the CRA adds penalties that grow fast. The standard late filing penalty is 5% of the balance owing, plus 1% for each full month you're late, up to 12 months. If you were already warned before, that jumps to 10% plus 2% per month for up to 20 months. Then daily interest starts compounding. What began as a small oversight can double or triple in just a few years. Many assume these charges are permanent, but they're not. Under the CRA's Taxpayer Relief Provisions, the agency can cancel or waive penalties and interest in certain cases. The problem is the clock. By law, the CRA can only grant relief for the previous 10 calendar years. Once that window closes, even they lose the power to help. Understanding the 10-year rule, imagine you apply for relief in 2025. The CRA can only consider tax years or fiscal periods that ended in 2015 or later. Anything before that is automatically out. For interest, the rule covers only the interest that accrued during the past 10 years. So if you owe from 2012 but the interest kept running, only the part built up since 2015 is even eligible for review. This 10-year limit resets every January 1st. Each year that passes quietly erases another from eligibility. Why it matters? Canadians often discover old issues late, maybe a forgotten T4, a business return never filed, or a small balance that grew with interest. By the time they notice, the 10-year clock has already expired. If your 2013 return ended on December 31st that year, you had until December 31st, 2023 to ask for penalty relief. Waiting until 2025 means that doors shut. The CRA isn't refusing help. It's bound by law. Why you've never heard of it. 3 reasons keep this rule under the radar. 1. Buried language. CRA guidance hides it in dense policy manuals most taxpayers never read. 2. Late discovery. People find problems years later, after moving, retiring, or being reassessed. 3. Future focus. Accountants tend to plan forward, not backward, so they overlook old relief opportunities. That's what makes the rule powerful and dangerous. If you move quickly, you can erase years of interest. If you wait, you lose that chance forever. Real-world impact. Picture this. A homeowner forgets to declare rental income in 2014. CRA penalties hit in 2015. Interest grows for 10 years. In 2025, they apply for relief. The penalties tied to 2014 are now ineligible. The year fell outside the 10-year window. Only the interest from 2015 to 2024 can still be considered. Or take a small business owner who fell behind on GST, HST filings during COVID. Those reporting periods from 2013 are now beyond CRA's reach for penalty relief. Even middle-income families get caught. A late payment from 2015 must be addressed before the end of 2025, or it's too late. And now CRA's automated system links debts to refunds and benefits. If you owe, your next GST credit or climate rebate can be redirected automatically. The 10-year rule isn't theory, it's the line between solvable and permanent debt. Thanks for staying with us this far. We appreciate your time and hope you're finding this information valuable. The silent deadline you can't afford to miss. Here's the part most Canadians never realize. The clock starts not when you learn about your debt, but when the tax year ended. That means even if CRA contacted you last month, the deadline may already be gone. If your 2013 tax year ended on December 31st, your last day to request relief for those penalties was December 31st. 2023. For interest, the cutoff is the year it accrued. If interest began in 2014, only the part from 2015 onward can be waived. Everything older is locked forever. This silent deadline advances automatically every January. It doesn't reset when you move, appeal, or even pay off the base tax. The CRA does, however, allow protective requests. If you're missing paperwork or waiting on an audit, you can file a basic relief request now to preserve your eligibility. Then send full documents later, and anyone can apply. Seniors, small business owners, new Canadians, or those facing financial hardship, illness, disasters, or proven CRA delays. The only condition is that your request must fall within that 10-year window. How to use it to your advantage. Step 1. Find your problem years. Check your CRA, My Account, or old notices of assessment. Note any years that ended between 2015 and 2024 if you're applying now. Step 2. Gather evidence. Collect CRA letters, payment records, proof of hardship or illness, or anything showing delays beyond your control. Step 3. Submit your request. Online, choose Request Relief of Penalties and Interest, or fill out Form RC4288, Request for Taxpayer Relief. List the affected years, describe your circumstances, and attach evidence. You're asking the CRA to cancel or waive penalties and interest, not the underlying tax itself. Step 4. Follow up. CRA aims to decide within several months. Keep copies of all correspondence and your case ID. If denied, you can request a second review. Why acting now could save you thousands. A $2,000 penalty from 2016 can easily double once daily interest adds up. Getting even partial relief could save you thousands. But wait one more year and the 2015 cutoff disappears. This rule isn't a loophole. It's part of federal law meant to give taxpayers a fair chance when life or errors get in the way. In 2025, with CRA's enforcement now digital and automatic, that relief is more valuable than ever. Submitting your request can also pause further collection while the CRA reviews your file. For those with benefit offsets or refund seizures, that pause buys time and sometimes leverage. In industries like agriculture, construction, food processing, and healthcare, where many employers depend on temporary foreign workers and permanent residents, staying compliant prevents small administrative errors from snowballing into large penalties that disrupt operations. For individuals, it's peace of mind. Quick facts you should know. Does this erase the tax itself? No. Only penalties and interest can be canceled. You still owe the base tax. What qualifies for relief? Serious illness, natural disasters, financial hardship, or verified CRA errors or delays? Can I apply if I'm being audited? Yes. File a protective request to keep your eligibility open. What if my year is already past the 10-year limit? The CRA has no legal authority to grant relief for those years, though they may still waive interest that accrued more recently. How long does it take? Typically several months depending on the complexity of your case. Key takeaways. The CRA can cancel or waive penalties and interest, but only within the previous 10 years. The 10-year window moves forward every January 1st. Relief covers extraordinary circumstances, CRA delays, or inability to pay. A protective request keeps you eligible even if your documents aren't ready. Acting now can prevent automatic offsets of refunds and benefits later. The CRA's 10-year rule isn't just another tax guideline, it's a lifeline. It can mean the difference between debt you can control and debt that never ends. If you've missed filings, struggled with payments, or received old CRA letters, don't ignore them. Log into your account, collect your records, and submit your request before the calendar resets. The earlier you act, the better your chances of success, and the sooner you stop the interest clock. If this video helped you understand how the 10-year rule works, please like, share, and subscribe to Canada Chronicles for more updates that protect your income, benefits, and financial future. Thanks for watching. And as always, see you in the next video.